Americans don't have taxes on their minds during the holidays, but there are some things that you can do before the end of the year that will help you when it does come time to file. This afternoon, our financial expert Paul Hood is here to give us a few tips on things that you can do now that will save you money in April. Paul, thank you so much for joining us day after Christmas.
You bet, Tatum. You doing all right?
I'm
Glad to be
doing all
here.
right. Yeah, doing great. Okay, first question is, people are preparing for tax season. Is there a way for us to make sure that we haven't underpaid our tax obligations?
Well, yeah, so, in life, success means being proactive. It's not waiting until after the end of the year to try to figure out where you're at, especially if you're a business owner or you've had some extraordinary thing happen, like you inherited, some retirement money, or you had a big gain in stocks or crypto or what have you. So it's good to plan. It's good to try to estimate where you're at right now. And there's some things that you can do, Tatum, before you're in.
So let's talk stocks. If you're in the position where stocks, you're losing some money there, is it a good idea to sell off those stocks by the end of the year?
Yeah, so we typically talk to our clients in two ways when it comes to stocks. One is there's a concept called tax loss harvesting. So if you've had gains throughout the year, different gains in different stocks, you need to know what those are. So then you can talk to your financial advisor about harvesting losses. So there may be a stock or something that you bought at here, and it's gone down some, but your advisor think it's worth more. Sometimes it's okay to go ahead and sell that, hold those proceeds in a different stock for 31 days and buy back into that stock. Or it's a great time just to evaluate getting out of stocks that have created losses, because those losses, you can harvest them to offset gains from earlier stock gains. And then you also, in addition to gains, you can deduct $3,000. So that's, if you're going to sell stock in a few weeks, might as well do it now. The other thing is people that are charitable here at the end of the year, a lot of times like to accelerate some charitable donations. If you have a stock that's selling that's at a gain, you can contribute that stock to a charity and get the tax deduction for what it's worth and never pay taxes on the gain. So you kind of get double benefit for it.
Well, while you mentioned deductions, let's talk about that a moment. Can you explain the difference between a standard and itemized deduction?
Yeah, so standard deduction is just the basic deduction the government gives everybody, whether you have any, can add up your actual itemized deductions to exceed that. So, and it was actually increased a few years ago under Trump administration and actually helped a lot of people get more deductions. Or you can add up your real estate taxes, your state income taxes, your mortgage interest, your charities, and a few other deductions, and see if it comes over that standard deduction or not. And if it is, then you get the larger of the two.
Okay, very good. I guess last question real quick. How early should people start filing? Making a plan for it, earlier the better?
Yeah, and if you've got a basic return, as soon as you get your documents in, it's great to go ahead and get that return in and filed. The challenge is returns that are normally filed from about March 1st to April 15th. We kind of watch those because there's so much volume goes into the IRS's website that there's greater chance for a mistake or an error, miscommunication. And frankly, my experience is a very large percentage of IRS audits happen on returns, especially filed between March 15th and April 15th. So you need to file early if you can. Otherwise, be prepared to file an extension. It's probably better for you.
Okay, always great advice. Paul, thank you so much for your time this afternoon. We'll see you in the new year.
Thank you, Tatum. We'll see you later.